What is going on? Billy here from Storm Trades with another trade recap. This time we're going to go through a NQ long setup from Wednesday, July 2nd's AM trading session. So there was actually an earlier reversal trade that many in the Unicorn University Discord took, and you will see that setup when we look at the M5 time frame. I did not get involved until after the hourly change in the state of delivery was confirmed, and therefore I had to get on sides on the continuation. We had a time frame alignment and the very clear daily bias narrative, so let's get right after it. All right, starting on the daily, I've got the daily chart here. What you're looking at is the last four daily candles, okay? When I'm looking at the daily, I'm trying to get a bias. I'm looking for a narrative that jumps right off the chart, okay? Something that's very easy to read and makes sense from the standpoint that price typically wants to trade from external to internal range liquidity and vice versa. So first things first, I always mark off the previous daily low, previous daily high, right? Already, price is sort of telling us the story, isn't it? Right. So we've just purged some previous daily low liquidity, right? There's always a liquidity pool down below the previous daily low and previous daily high. I don't have a bias based on this right now, but sometimes just marking off the previous daily high and low will start to give you an understanding. I always want to run a fib from the previous daily candle just to sort of see where we are currently trading, right? If I expected price to want to reach higher, and I'm adhering to the power of three sort of standard, right? So an open, low, high close if I'm bullish. Well, we just took some liquidity, right? I would want to see if at the end of this day, all right, when we're looking at the daily candle, I would want to see the wick forming in the lower quadrant of this previous daily candle, right? So that's kind of sort of why I put that there. Again, it just helps me with understanding the logic. All right, next thing I want to take a look at are we currently delivering from any sort of internal or external range liquidity that would also help us understand where price is likely to move to next. And yeah, well, we had a nice unmitigated daily fair value gap here, a bullish fair value gap, and price took the previous daily low into that imbalance, and now I would expect price to move higher. Where does price move higher to? Where it's going to draw towards external range liquidity now. Do we have any external range liquidity? We do. We've got a swing high up here. So does price need to make it all the way up there today for this narrative to be right? No, I'm only looking for just a logical narrative that makes sense based upon how price books. Okay. Now I was bullish um, on this daily candle. So I had a bullish bias, and that's it. I'm moving to the hourly. There's nothing else for me to do on the daily. I do not take trades, execute trades based on the daily bias. I just want it for narrative. It helps me understand where price is likely to go. All right. Now, moving to the hourly. I am looking for on the hourly. Okay, I'm looking for sweeps of liquidity, right? External range liquidity. I'm looking for internal range liquidity, and I'm looking for market structure, right? And so where it is market structure from earlier in the week, right? So from basically Monday night, we've been getting lower highs. Excuse me, yes, um, lower highs and lower lows, lower highs and lower lows. Okay, we tried to move up here a little bit, came into a imbalance, and then we've moved down again as we moved into this daily liquidity. However, once we took this previous daily low, right? Once we let me grab this, once we took this previous daily low, right? Look at this V-shaped bullish move on the hourly with a strong close below this last down close candle, right? So the fact that we have a very strong and sort of very easy to read daily bias, I'd take a look at this strong close above this previous hourly down close candle, and I think I'm saying that's the change in the state of delivery right there. All right. Now, whenever I have a change in state delivery, I want to draw a fib from the most recent swing high of the series of down close candles that took the liquidity, and the standard deviation is not a model, right? It is just helping me understand, are they relevant? liquidity pools that line up with standard deviation points that we typically see price move to, retrace from, reverse from, and close above, right? So we know that we would typically, if we have a bullish move here, we will typically want to move to the -1 to -1.5 before we consolidate again. If we're going to have an expansion move, well, we've got liquidity here, right? So we've got the previous daily high up here. We've got the swing high right there. So I'm going to just make note that I think price is likely to draw up here eventually. And we have some low resistance liquidity here, right? So just more narrative, right? Just more evidence to the logic that we're seeing that could play out. And we've got some relative equal highs here, right? So we've got a slightly lower high here than on the right than we do it on the left. So, relative equal highs are a great pool of liquidity. I'm just going to move this previous daily high up here, right? So you can sort of see we've purged the previous daily low into the internal range liquidity. We have displaced now through the down close candle, and I am looking for higher prices. I'm looking to get on sides. Now, whenever you see a large hourly candle like this, that means you've already missed the reversal, right? Now, there were people inside of the Discord that I trade in every day that had already been on sides from down here, almost like this turtle soup here, right? And so they could have already almost been done with this trade. But that doesn't mean that you can't get on sides for the major move, right? I always want to take a look at, as you'll see, I take a look at the ADR levels, right? And as you can see almost here, where we had the change in state of delivery, which is why I felt comfortable putting the change in state of delivery there, is we had the 1/3 ADR right here, right? So we've already swept that with a strong move back inside, and we have a lot of room here to go until we reach the other 1/3 ADR, right? So I've just started to notice on my data, and you'll see on a lot of my videos that I like to target the 1/3 ADR, and I like to see price react from that area. So all that's telling me is that I think price has a lot more room to run. So I'm not worried that I missed the reversal. Okay, I'm looking to get on sides, and I'm looking to get on sides when I have plenty of room to go to some relevant liquidity areas. Now, since we've already established that we've got to change the state of delivery. One of our criterias is some sort of a move into a higher time frame POI. We have that with this move into the daily fair value gap. I'm now moving down to the M5 time frame, and immediately you will see right here that you can already probably see, if you trade ICT, you can see where we already had this purge of liquidity here. That was the previous daily low. And you can see where I'm just going to mark out here. We had a change in the state of delivery, right? We got a fair value gap that was traded just into a little bit, and then we moved aggressively outside of that. I'll make note here that this is a breaker, right? The highest up close candle prior to the move down that took liquidity, right? We have come through that breaker with displacement, and we have actually a fair value gap right there that overlaps. This is a unicorn, right? So people could have been involved right here. People could have been involved down here if they were trading T trades. The 2022 model is effectively right here. So you could argue, hey, this trade is over, right? Or we missed the boat. Well, not necessarily, right? We always have a way of getting on sides with a continuation as long as we follow price and follow logic. Okay, price is fractal. So price wants to move from internal to external range liquidity. Do we have any internal range liquidity where we're currently trading? Well, first off, let me mark off here that we also have a relevant POI, or POI, but liquidity pool up here where we have the London high, right? And here's the 1/3 ADR we talked about. Now we want to take a look at, where current price currently trading from? Do we have any relevant internal range liquidity that we have come into? And we have, right? We have an M5 fair value gap here. So again, price is fractal. So the same concepts that we use on the daily, we use on the hourly, and then we use on the M5 execution time frame. At least that's what I trade on. So we have a dip into this internal range liquidity. Whenever we have that, I want to mark off the series of down close candles. In this case, it was just one large down close candle that came down to take that liquidity. If we get a close above here, Okay, I can look to get on sides with a trade that brings us up to the London high and into the 1/3 ADR as we continue to move higher to our where our standard deviation zones were on the hourly. Okay, so I'm going to move price forward here. On the very next candle, we had a very strong close. Okay, see that we had a sweep and a close above. Okay, so I am now looking to get involved in a trade right here at the close of this candle with a stop at the swing low, and I'm targeting 2R effectively. Once I get to the London high, I'm moving to break even and probably taking some a portion off of the trade. Okay, it's difficult for me to show that with the way that this replay does, but so effectively I'm just going to show the buy here and stop loss below the swing low, take profit. Oh, I don't know why I did that. Anyway, we'll watch it right here. So here we go. We're going to move price forward. We're already in the trade, no drawdown whatsoever, and we've moved to R very easily. Now, always interested to see how we react off the 1/3 ADR, right? Just for our data. And we actually came up, and there we go. Now watch how price just sort of hangs out around this 1/3 ADR for the rest of the day. Okay, very interesting. Just something to take note of. Anyway, this was a really cool trade. Just goes to show you that we don't have to catch the reversal, right? T-Trades always talks about trading the continuation because it's really a way of understanding that you are in fact on sides with the market. But that only really works if you have liquidity pools above that have not been taken already. I hope you guys got something out of this. I really enjoy reading the comments. Anybody who likes and subscribes, thank you guys so much. I appreciate it. You have a great day.